This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, April 14th, 2015. Euro dollar. So the euro remains under pressure since stalling out at 10.53 several days back and breaking down below some key range support at 107.13, and the market is now focused on a retest of that recent 12-year low at 104.62 going back to the 13th of March. A break and close below 104.62 would confirm the next medium-term lower top at 110.53 and expose a move down towards the parity level over the coming weeks. At the same time, however, weekly studies still continue to be oversold, and there is risk that any setbacks from here should be limited in the interim or in the short term in favor of additional consolidation and corrective action. But again, at this point, the 104.62 12-year low from 13th of March is in focus, and at this point, only a break back above yesterday's high at 106.20 would take the immediate pressure off the downside. Sterling dollar. So cable has recently broken down to fresh multi-year lows this week, trading down to 145.65 ahead of this latest minor rebound. But again, the break below that previous low that we had seen back on the 18th of March now opens the door for the next downside extension towards a measured move objective over the coming weeks at 141. At this point, only a break back above 151.65 would take the immediate pressure off the downside in the cable market. Dollar yen. So dollar yen has been comfortable trading within a multi-day consolidation, and the market has recently stalled out above 120 with the possibility now for a move back towards some support in the 118 area. Ultimately, the highly constructive outlook remains intact, though we continue to see this consolidation and are waiting for a break. A push above 122.03 would open the next major move upside extension towards the 125 to 130 area, while only back below 115.55 would ultimately compromise the bullish outlook. Euro Swiss. So Euro Swiss continues to extend its decline since recovering to 108.15 back in February, and the market has now broken down below 104 and is threatening a retest of some previous resistance going back to the 16th of January, that high from the 16th of January at 102.50. At this point, if the market continues like this, it could extend down towards the parity level, though there is support that comes in around between parity and 102.50, which should support this market in favor of a higher low and fresh upside for recovery back towards that recent 108.15 high. Only a close below parity would ultimately negate the recovery outlook in Euro Swiss. Aussie dollar. So Aussie dollar remains locked within a well-defined downtrend, and the market has deferred to a period of consolidation over the past several sessions. A break and close below 75.33, the recent multi-year low that we saw back on the 2nd of April, would open the door for the next major downside extension towards the 70 level further down. At this point, any rally should be very well capped ahead of 78, while only back above 79.38 would compromise the bearish outlook. Dollar CAD. So dollar CAD remains locked within a multi-day, multi-week consolidation, though the consolidation is classified as a bullish consolidation given the intense uptrend over the past several months. An eventual break above the recent high at 28.35 is favored for a push towards the 2009 peak at 130.65 further up. Any setback should continue to be very well supported ahead of the low that we saw, the consolidation low back on the 3rd of February at 123.50, with only a break below this level to compromise or delay the bullish outlook. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, and the market is now looking to put in the next lower top around the 77 area in favor of a fresh downside extension below 71.76 and towards the 65 psychological barrier further down. At this point, rallies should continue to be very well capped ahead of 77, with only a break back above 78.90 to compromise the bearish outlook. SPX 500. So the S&P 500 has stalled out since posting record highs at 2120 back in February, and the market could be in the process of carving a major top. However, we're going to need to see a break below critical support at 2040 to confirm and open the door for an acceleration of declines. Until then, the pressure does remain on the top side, and there is risk for a fresh record high beyond 2120, which would push the market towards 2200. Gold. So gold continues to show signs of recovery since stalling out ahead of that 2014 base at 1131, and the market will now need to push back above 1223 to confirm and accelerate gains back above 1300. At this point, key support now comes in at 1178, and only a break back below this level would compromise the current basing and recovery outlook for the gold market.